are looking at interesting ways of making money. So without much ado, I have my guest with me virtually. You've missed him for a bit, right? Well, I have Olisadualima Elumelu. Good evening, Olisa. How you doing?
Hi, good evening, and good to be here.
Glad to
Lagos
have
traffic
you.
1, me 0.
Well, we meet.
We are moving ahead.
Right. So
Yeah, it's good to be here. Thank you, Joy. It's good to be here.
glad to have you as always. Like I said, it's great to be in 2025. It's a Monday. Naturally, after all those interesting things we've done throughout last year, we're looking at how we want to start making money in 2025. And rather than put all our eggs into one basket, we're looking at how we want to diversify our portfolio. So that is basically what we'll be, focusing on today. And I know Lisa has more than, he comes with those sage words to help you. And one of the things I love when I'm having conversation with you is how you're able to break it down in the, to the lamest way terms for anyone to get a hang on and understand. But you know what?
Yeah, of course.
It's not me who is the financial expert. I'm going to leave it to you at your doorstep and start off with diversification, right? I know that, hey, it's great we hear a lot, oh, diversify your portfolio. Oh, do this. What does that even mean? And in the context of what we're talking about, especially when it comes to investment portfolio, really, why is that even important? But first, what exactly is diversification?
Hi, Joy. Okay, yeah, thanks for having me again. I mean, it's always a pleasure. Of course, the very first question, I was not surprised. Right? and I like how you actually did, qualify it by saying, there's a lot of times we, can't stop, and it makes me wonder. It just reminds me of, some brands when they, advertise and they're like, drink responsibly. We never ever get tired of hearing that. Right, yeah, drink responsibly.
Right, right.
And I think that's exactly how investment really is.
Okay.
We can talk about diversification for 1,000 times a day. I mean, that's exactly why we do what we do.
Right.
Because we need to diversify. So in terms of investments, right, it's like having multiple streams of income, and having, if one tap runs dry, right, others can keep it flowing, right?
Okay.
In finance, we often every time really need to spread investments and investment risk across different asset classes.
Okay.
Asset classes are just pretty much stocks, bonds, real estate, whatever it really is. Basically trying to balance risk and reward. Now, the overall goal for doing this is we avoid trying to put all your money in one area, that could actually collapse. Right. And that's pretty much trying to take a calculated approach, right, towards ensuring that you can spread that risk. Of course, you speak to people, that have uncles, aunties, grandparents, to talk about some financial crisis sometime.
Okay.
In fact, our parents then will tell us stuff like, I could have bought you a bicycle today, if not for the financial crisis of 1982. My point is, we hear about this thing.
They shift the goalpost, don't mind them.
And it's something that, could definitely, help us.
Right.
And not just investments, across, different areas of life, you need to spread that risk, right? So that you do not get burnt in the end.
I like the fact that you said it's better to spread it so we don't get burnt, because what's the guarantee that if we put everything, all the eggs might not just get rotting?
At all. You must always diversify. Always.
But
The Lagos men know a little bit about that, but that's another chapter.
See, we're not even going to touch. See, that table you want to shake, it's not today.
It's just a rocket a bit. Just let your heart cut. Go enjoy it, right?
Okay, so let's even get into certain things that sometimes some people don't get proper information about, and that has to be with common errors. I would say errors because sometimes we learn from those errors once we know what they are. But what are those common errors when what thinking of investing or diversifying our portfolios, what are the common errors or mistakes investors make when they are trying to diversify?
Okay, I think a few things I'll mention.
Okay.
You know, I think I mean, there are so many, but,
Right.
but just for the sake of time, I mentioned a few. I think the very first one is trendy picking, right? And that comes
Well?
about the stock. What stock is winning now? People are buying.
Exactly. I hear that a lot.
Yes. And then you just jump inside and then
wow.
you pick it. And then you tell people, what's going on? Oh, as soon as I entered inside,
You just
and
sit there.
started going down. Exactly. You know, or it didn't go well or something. And it means, you know, fundamental analysis is absolutely expedient.
Okay.
You need to research. And you know, if you cannot research by yourself, of course, you have people, you know, professionals,
Fund
you know,
managers
like,
and-
we fund managers, access Mansard and co, right, where, you know, you can essentially, you know, get that kind of advice from, right? And you do not have to, you know, get yourself burnt.
Right.
The second thing I would say is a lot of people feel investment would be, they confuse diversification with duplication. Now, what I mean is
Okay.
this. If you own 10 stocks in the same industry, right, it doesn't count as diversification on a sectorial basis or on industry basis, right?
Okay.
What I just mean is you can't, some people will say, I bought at this time, I bought at this time. If you're not trying to vary time, right, you need to ensure that you spread, you know, across different sectors, different asset classes and all, and not do the same thing.
I'm going to want you to break
over
that
again.
down because say for instance, like, yes, I'm in the media, right? And I'm buying stocks for media. So it's not me buying everything that has to do with media. I should either buy something in media, I should buy something in, say, help me out. Maybe in food and
So let me.
So that you know, I'm
So
just looking
let
at
me
it.
help you.
Okay.
Okay, so that fantastic question. So what I'm saying is this: before any investment action is taken,
Right.
there needs to be some fundamental analysis, which means you've heard something and you think the media industry might move in line with this.
Okay.
Now,
Okay.
what you do not do is that you look at, you know, stocks or one single stock that you want to buy in multiple places, right? You can say, I have a bank account in bank 1 or bank 2 or bank 3, and then what you're basically doing is buying the same thing across board.
Right.
And telling yourself that you're using different, you know, sums of money. That's not diversification, right? What you're doing is duplicating the same risk, right? What you need to do is you can even go as little as saying one media company from any media company and saying, are the fundamentals in these two companies different? You know, what makes them, you know, different from each other, such that if some news affects one, the other might be shielded.
Right.
Essentially, exactly. So that's what you need to do. So a lot of people do that, you know, and make that mistake with that. So diversification is not duplication, is what I'm trying to say.
All right.
The next thing I'll say is, you know, just checking on your portfolio and rebalancing. A lot of people see, you know, investments as, like leaving rice in the casserole dish. You know, you need to keep checking it. People just feel put it on and forget about it. No, right? You need to keep checking it, right? Or you have an advisor that, you know, checks on it for you regular basis, so you can give you feedback and exactly, you know. So always have checkbacks. Don't avoid checkbacks. Do not do trendy picking where you do not, you know, research on stocks before you invest them, and ensure that you're not duplicating investments. What you're doing is to ensure you're diversifying them and not duplicating them.
I like that. Thank you so much for breaking that down. And now that we're in economy, Nigeria is in its own lane. I will not even get into that further, but you know what I mean. So now that we're in this special economy, where sometimes it seems like inflation is not, it's on another level on its own, and interest rates and all that. How does that affect diversifying our portfolio?
Okay, for Nigeria as an economy, I think one thing would definitely, you know, can't go unnoticed by saying is inflation, right? And inflation is playing a very, very key role in the economy today, which means that The central bank definitely tries to reduce inflation to, a decent level by, altering the money policy rate.
Okay.
And that means that the more they hike it, the less attractive it is for the private sector because they want to borrow money. But at the same time, it also helps the money market for investors, right? Like they say, they say in church, when people are praying for long life, the person who is making coffins is praying that people will die. It's just like that. However,
you went there. Okay.
It's something that we need to talk about.
Right.
So when PR keeps going higher, what happens is that it benefits the money market space, right?
Okay.
Because when interest rates are rising, it hammer bonds opportunities on money market essentially. So it might be good to keep an eye on what the central bank policies are, adjusting money, money policy. But the higher it goes for that, you can oscillate between fixed income and equities. Usually, textbook definition, when you have fixed income securities, fixed deposits, and the rest, commercial papers going higher, right, it takes a bit of beating on the equities markets because equities markets are people who want to trade stocks, right, and keep their money very liquid essentially. Right. But when you have fixed income going higher, what people want to do is just move to a safe haven, right? And just leave themselves safe, right? So you need to just keep oscillating that and knowing exactly, but keeping an eye on inflation in the Nigerian economy is one thing that, of course, other things like cash reserve ratio and things like FX, reserves. The higher the reserves, the more liquidity in the FX we have, so that the foreign exchange rates keeps balance and all. But I think inflation definitely forms a huge part of what investment decisions are supposed to be made in Nigeria currently, and it's very important to keep an eye on that in 2025.
Okay, that's actually good. So, now I want you to help someone who's trying to diversify. Yeah, don't even look at me right now. I'm just saying. So.
You're right in front of me, so just it's hard not to look at you.
But what advice would you give someone who's trying to diversify for the first time, or is just looking at it? This is 2025. I've heard about it. I've taken classes. I've listened in on several platforms, but I'm looking at 2025 and I want to make money. I want to make sure that my investments are in the right place at the right time. What are the trends, or should I even be looking at trends? Should I be, thinking of certain sectors to get into? What should I be doing?
Yeah, I honestly, I will keep saying this thing over and over and over and over again. If you're just starting to invest funds, like it's just one word, funds, and more funds. Right,
Okay.
Stick to funds. Right, the issue people have is that they've pictured investments to be this thing that they jump into when they have arrived, and then they want to, arrive more. Right. There's no need for any Jackie Chan moves. I always say it every time. Don't overdo.
Okay.
Leave it for a boundary God. Right. Just start with funds.
All right.
Yeah, money market funds. If you think you want to, increase take a bit of risk, there are equity income funds. Like Mansard offers money market funds. We have the equity income fund. We're definitely working on the bond fund soon, which we'll definitely bring to the public when the time is right. But stick to funds. What funds do is they help you reduce risk while looking for the highest yielding opportunities in the market. Right? So stick to funds. Funds will give you better returns than keeping the money in cash. Right? So stick to that.
Right.
Do not necessarily. And what you can do is when you invest in funds, you can ask for the asset allocation, which is what you have the right to ask your advisor. This fund I'm invested in, what are the underlying assets? What are you investing in? When you get that, you can get securities, and of course, let's just read up a bit more and know exactly what the securities are, how safe they are, so that you'll be a bit more informed until you can stay on your own. Just like riding a tricycle. I don't know how much we would bicycles, right? Before you would bicycle, you would tricycles, right? And they'll have those two-legged
they have
tricycles that you have them. Exactly. And then you're riding with that, riding that. And one time, I don't know about you, but I had an uncle who we took out one of them, and then I was riding with only one, and then I had to ride on two wheels, right?
Okay.
And, so my point is, baby steps, right? But start
Right,
with funds,
right.
right? And then from funds, you can track, and then you can graduate to securities.
Lagos, I'm sure that you've gotten all that information, because you know what, if we could just keep going on and on and on, and trust me, Olisa has so much knowledge to share with us. But you know how they say, with great conversation, the time is never our friend. But
Never, friend.
well,
Especially on this show, I don't know how it goes so fast. You know what? This is always the fastest 30 minutes of my life. Why?
oh my goodness, I know, right?
Let's not
get into it, right?
Let's not get into
Anyways.
it.
It's always great having you break down every simple term, especially when it comes to making investments for 2025. And, well, always looking forward to you generally being here on the Mansard Safe Cruise. I'm looking forward to more insights going forward. But thank you so much for being here as well. And Lagos,
It's a pleasure.
you know that you're always welcome to, share your thoughts as well. But as always, to learn more about the Mansard investment plans, what you can do is reach out to Mansard on their website. That is www.axamansard.com. Or what you can do is call 0700 Mansard. That way you'll be able to, ask your questions, have someone deal with you personally. However, for those who are social media savvy and want to get more information, you can reach out to them on Facebook, Twitter, or X, and on LinkedIn at Mansard. However, on Instagram, it is at @axamansard_. Well, till Wednesday, because it comes your way. Mansard Safe Cruise comes your way Mondays, Wednesdays, and Friday. See you on Wednesday.
Mansard Safe Cruise. Brought to you by Mansard Insurance PLC. AXA, know you can.